last episode of Sterling Digest, the last episode of 2024. And in this episode, we're going to do a review of the performance of the markets and the economy in 2024 against our expectations at the beginning of the year. So here with me are my colleagues Isabel and Davis, and we'll just get straight to a quick review of different things, the economy and the NSE, together with the macroeconomic variables. I'll start with the performance of the economy. GDP has been positive, but we got some news say a week or so ago that the World Bank has reviewed GDP growth downwards to 4.7% against expectations of between 5 and 5% at the beginning of the year. So the World Bank quotes the protests at the beginning of the year and the floods as some of the reasons that have reduced their growth forecasts. Moving on to the Kenya shilling performance, maybe Davis can give us a quick review. But generally we got our forecast wrong. No one expected the shilling to be this at levels of 130 at the end of the year. The average for 2024 has been 136. That's up to November against 138.50 for the dollar up to November 2023. Davis, do you have anything to say about the performance of the shilling?
So just as you're saying, it seems everyone was so off on our forecast. Like every meeting we had, even clients, everyone thought the shilling would just continue depreciating, but yeah, it strengthened quite a bit because of just the amount of inflows that came in around February, March, thereabout. Yeah, and it's been positive ever since. I think our initial forecasts were it would go nearer to 170, but now, this as you said, it's closing the year around 130. So it's quite off. And honestly, forecasting currency is quite hard because it's, I guess, statistically speaking, it's like a random walk. So even the methods that we were using to forecast, the degree of accuracy was not the greatest, because forecasting currency is quite difficult. Yeah, and that is goes to show.
Yes, and just to add to that, no one had expected the shilling to depreciate as fast as it did also in 2023. So worst case forecast was 166 to the dollar, the best case 150, and the worst case 159. The average for the year up to November was 136, as I mentioned earlier, but it's at around 130 at the moment. Maybe something to mention with regards to the shilling was the early redemption of the early repayment of the Eurobond that was maturing in June. This was redeemed in February. And also the current account deficit has remained relatively stable at 3.8% of GDP. Moving to foreign exchange reserves, we saw an increase in the reserves. This was consistent with our forecasts. Just to mention that the reserves up to September average 4.1 months of import cover, which was above or more or less consistent with our expectations. We had talked about 4.1 months of import cover. Davis has mentioned an increase in capital and financial inflows. There are also IMF disbursements, which we mentioned in our report at the beginning of the year. So reserves increased by $2.2 billion. On inflation, Isabel, maybe you can tell us something about inflation. I think our expectations were inflation would remain in the upper band, but we saw a significant decline in inflation during the year.
Yes, so when you take averages of inflation from Jan to November, you'll get 4.7. So that's slightly below the midpoint of 5%, which is that's the target range of 2.5 to 7.5%. So generally speaking, in the beginning of the year, the uncertainty around geopolitical tensions and all that was going on in Russia and Ukraine and the Middle East, etc., led guys to speculate around where inflation will be and oil prices. So they started holding up inputs in manufacturing also. So you'd see a lot of so the inflation went really up. But now oil prices have moderated, they've come down. You also see significant decline in food inflation because of the rains that happened, and actually the CBK is expecting agriculture sector also to support GDP this year. And yeah, so that's what really led to the current inflation levels. Yeah.
So just to add to what Isabella said, non-food inflation moderated on account of muted demand pressure. So that is one of the concerns economists have, that inflation is also declining because of low demand. Any expectations for 2025? The last MPC report actually talks about a slight increase. I think I saw about 3.6%. Maybe
Yeah.
in the first quarter, or I can't recall. But
yeah. So in terms of inflation for 2025, we'd at least expected Q1 the inflation to continue going to remain within the lower band of the target range by CBK. But you have to remember that this inflation is changing price. Yeah. So it's not really as much as we're feeling the inflation, meaning we're feeling prices are still high. That inflation is a change in prices of inflation as at Jan versus inflation of 2024. So we'll continue seeing them below the 5%. And this year we've also seen bits of deflation where you're feeling high inflation is going up, but the change is going down. So yeah, that's what we expect first quarter of next year. But also the CBK governor mentioned GDP is expected to increase to 5.5 with the expectation of 5.4 this year. Next year is 5.5. So that will be supported by manufacturing sector, which will recover because interest rates have started coming down. So they're expecting they'll be able to borrow at lower prices to do manufacturing and etc. So that will really support economic activity next year.
thanks for that. Maybe let's mention interest rates. Previously we saw a revision of the central bank rate in February, an upward adjustment of 50 basis points. And since then, the first cut was around July. So we had cuts in the CBR in July, September, and December. So current rates are at 11.25%. So moving on to, let's mention interest rates overall, both commercial and domestic debt rates.
Yeah. Well, so we expect interest rates to continue coming down going forward. This, given how high NPLs are, we'd expect the CBK to continue reducing benchmark rates. And then for banks, the lending rates won't come down as fast, at least as deposit rates have been coming down, as banks tend to also protect their margins. Yeah. However, from next year, ideally, we should expect things to come down a little bit at a slower pace, and hopefully that will reduce NPLs and also stimulate economic activity.
Yes, there's pressure also on the banks to reduce lending rates because lending rates haven't been revised downwards, yet deposit and savings rates continue to decline. So moving on to the NSE, maybe just a short review of the performance of the bonds market. Then maybe Davis can talk about the equities.
Yeah, so turnover has increased by 108%. You look at last year versus this year, Jan to November comparison, and that's because interest rates increased significantly, and so investors took advantage of that and flocked into the bond market. And the CBK started issuing short-term securities because it made sense. If interest rates are high, you issue short so to manage your cost of service, debt service. Yeah. So yeah, and the T-bill rates are quite high. The T-bonds also the rates were quite high. So generally speaking, the bond market did very well this year. But now we're seeing interest rates coming down. Guys are trying as much as to do as fast as possible to be able to hold as much rates, as much cheap bonds as possible, take advantage of the rates before they go down even further. Yes, so maybe you can just go to the NSE
Equities,
performance.
yeah, the NSE equities, good performance by both the NSE 20 and NASI. Any
Yeah.
thoughts?
Yeah, so for our viewers, the reason we're rushing is because we only have a few minutes left. Yeah, but yeah, so with regard to the NSE, the NSE has been performing really well. NSE and NASI both above 20%, largely because of the retail market, which is a huge surprise. And so we expect that going forward, ideally, fund managers should start coming back because interest rates are dropping, and so the NSE should become more attractive. At least that's the hopeful sentiment. But yeah, it's largely been small cap stocks and largely driven by speculation and as well as dividends. Yes. So,
Any final thoughts about 2024 and expectations of 2025? Are you positive, negative, neutral?
positive on the market because of dividends and the like.
Isabel, yourself?
Yes, likewise.
Thoughts on the NSE or about generally the performance of the economy in 2025?
Yeah, well, I'm hoping that the economy will start improving as interest rates start coming down because honestly things are quite difficult. NPLs are extremely high, businesses are suffering. For the NSE, the hope is that fund managers will start coming back into the market because of how low interest rates are going. And ideally the retail market will just continue pushing things as dividends are announced in March. So generally positive on my end.
Isabel,
Yeah.
yourself?
Yeah, aside from that, I am positive about KCB next year, especially the first quarter after full year results. So that's for me the other outlier for next year.
Myself, I'm positive about the markets, but I see political risk as becoming a big concern, especially in the run-up towards 2027, which is the next general election. That's it from us. Just wish you a Merry Christmas and a prosperous 2025. Goodbye.